Welcome to your market brief for the week of March 16th. I'm Caroline Woods. As the nation grinds to a halt amid the coronavirus pandemic, I'm here at home but ready to get you prepared for the coming week. The Fed slashed interest rates to near zero on Sunday night and also initiated a $700 billion quantitative easing program. This came after President Trump declared a national emergency on Friday and also announced a U.S. travel ban on Europe that now includes the UK and Ireland. As virus cases surge across the nation, I spoke with Mike Schumacher. He's global head of rate strategy with Wells Fargo Securities.
That's probably not entirely out of ammunition, but we really need at this point is a big fiscal response. It's pretty evident that economies are taking a big hit. All you have to do is look at the news flow and see store after store or company after company closing for a month, 2 months, 3 weeks, whatever it is. And it's obvious the economy is going down dramatically across the Western world. So to buttress that, we need a big fiscal response in various countries. Now, the U.S. is off to a decent start, but probably has a lot more to go. You saw the House bill get passed last weekend. Senate's supposed to debate it this morning. Perhaps it's put into action today. Whether that's enough or not, who can say? But it's the fiscal response at this point, not the monetary response.
What's Wells Fargo's strategy in trading this? How are you guys positioning yourself amidst the turmoil?
Now, the most important thing is to try to stay out of trouble. So when markets are super illiquid, you've got to be there as a market maker, but nonetheless not take on massive quantities of risk. Now, with the Fed coming in to do QE, that's going to help support liquidity in the Treasury market, which is pretty rough, frankly, at various stages last week. So I think that's a good thing. And our advice to clients is this is still early days as far as the virus's impact on the economy. So buckle up. Don't necessarily put on a lot of risk just yet. Maybe you start to scale in at some point soon, but you have to be really careful.
The fear, obviously, is that coronavirus will slow economic growth and take a bite out of corporate profits. We're already seeing some of the impact. But I guess, what does the recovery look like?
Yeah, great question. We're all hoping for a V, of course, and we certainly don't want an L or a U or some other strange-looking letter. But the idea is that if the virus is actually stopped fairly quickly, then growth could snap back within 3, 4, 5 months, something like that. I suspect the next few months are pretty grim, but it's really a function of how quickly this virus's impact is really knocked out. And that's yet to be determined, frankly. You've got all sorts of measures being taken right now across the Western world. France has shut down pretty much everything. The U.S. has been taking a lot of steps in various areas over the last 24 hours to go in that direction, but it's a function of how quickly that happens.
That was Mike Schumacher with Wells Fargo. Now let's shift to a preview of the week ahead. On the earnings calendar, major companies reporting this week include FedEx on Tuesday, General Mills on Wednesday, and then on Thursday, we'll hear from Accenture, Lennar, and Darden Restaurants. With large group gatherings being shut down across the country, everything from pro and college sports to Broadway shows, even theme parks, investors will be paying close attention to Darden's plan going forward. Keep in mind, the company operates restaurants like Olive Garden and Longhorn Steakhouse. It has 1,700 restaurant locations and employs 185,000 people. If restaurants like these have to close down because of the coronavirus outbreak, analysts will likely want guidance on how bottom lines will be impacted. Shifting to the campaign trail, Arizona, Florida, Illinois, and Ohio will head to the polls in the next round of primaries. And finally, let's take a look at the economic calendar, as both the U.S. consumer and the U.S. housing market will be in focus this week. The Census Bureau reports retail sales data for February, and the National Association of Home Builders releases its housing market index for March. Additionally, the Bank of Japan announces its monetary policy decision on Thursday. That concludes today's market brief. As always, thanks so much for watching. I'm Caroline Woods. Stay safe.